What's going on, everybody? Thanks for tuning in. I just wanted to briefly go over how you would figure out your yield on cost on a dividend paying stock, or in the real estate business, your ROI, your return on investment. Well, first off, I'd like to start with the company Realty Income, ticker symbol O. Right now it trades, as of closing today, February 4th, I believe today is, it closed at 68.83, and Realty Income is one of my favorite stocks. I know it pays a monthly dividend of 0.226 cents, and remember that's per month. Not every dividend paying stock pays out on a monthly basis. Some pay out yearly, some pay out quarterly. Majority of them pay out quarterly. Now, if you were to buy it today at that price, the way you would figure out your yield on cost, you would see how much you would make in dividends in a year. So since this is monthly, you do 0.226 times 12 for the months, and you get 2.712 for the year. So you make $2.71 roughly per share every year. Now, to convert that to your yield on cost, you then take your annual income from however many shares, whatever your annual income, and you divide it by your average cost per share, which in this case, if you bought it right now at 68.83, your average cost or your yield on cost would be 3.94%. Now that's pretty easy. Now that's a monthly paying company. Now I'd like to go over another stock with you guys. I'm out in my garage. It's a little cold, so this dry erase almost dries instantly. It's almost like it's permanent. So I have to use a little bit of hand sanitizer to get this off. Bear with me for a moment. I apologize. Now let's go over how to find your yield on cost on a stock where they pay out quarterly. Now that's every 4 months. So one of my favorite stocks, we'll go with New Age Era, NEE, ticker symbol NEE. Now NEE, as of close today, February 4th, their share price is roughly $178 per share. Hope you guys can see that just fine. Now NEE is one of my favorite stocks, so I know they pay a quarterly dividend of $1.10 per share. So in order to find your yield on cost, if we purchased it at that price right now, you would take, so this is your dividend per quarter, so you need to figure out how much you make in a year. Pretty easy math there, huh? So you're bringing in $4.40 per share every year. So to find your yield on cost, you need to take your annual income divided by your initial capital invested. So in this case, your yield on cost is 2.47% if you were to buy it right now. Most dividend investors wait till there's a dip, and then you buy the dip, therefore increasing your yield on cost. That's basically it. If you guys want, we could go over another one real quick. Alright, so let's go over another example. Another one of my favorite companies is Innovative Industrial Properties, REIT. IIPR. This company owns buildings, leases them out to dispensaries. With the boom in marijuana lately, gotta be a good company. It's already made me a lot of money, and I'm very happy with it. It's a dividend-paying company. They've been increasing their dividends. However, this company's only been around since 2016, so there's not as much history to look at with it. However, it's a company I truly believe in. So as you can see from my videos, I have a significant amount of money in it. Not a whole lot, but a decent amount. Now, IIPR. On the close of February 4th, IIPR closed at 65.55. As it's my favorite company, I know that it pays a dividend of 35 cents per quarter. So every 3 months, it's paying me 35 cents per share. So if we were to figure out our yield on cost, we need to figure out first how much we would make annually. So we take our 35 cents times 4, $1.40 a year. You guys can check that. $1.40 a year. So to find our yield on cost, we then take our $1.40 a year divided by our average share price. Because if you bought 50 shares, 25 shares, whatever, 5.5 shares, because there's fractional shares within one finance, whatever your average cost is, you're essentially dividing your annual income by your average cost. So if we buy IIPR, just one share at 65.55, our yield on cost would be 2.13%. So you put $100 in with fractional shares, you're essentially getting 2.13% return just if you bought it as is right now. So buying it at a dip, you can see how your yield on cost escalates very quick. If you were to buy this at 60 instead of 65, that's a big difference. So it's always important to wait for the dips. Be patient. There's no reason that we need to be in a hurry. We all work very hard for our money, so why would we be in a hurry to try to lose it? Better to sit back, wait, and collect a little bit than maybe lose a lot. As always, go ahead and educate yourself. The stock market's a crazy thing. Real estate's crazy as well. Real estate's a little more predictable than the stock market, but if you pay attention to the news, what's kind of going on the road, you can get a good idea of the stock market as well. That's how you figure out yield on cost. Thank you guys for tuning in for another video. As always, like, comment, subscribe. Let me know what you guys would like to see on the channel. This is a newly created channel, so please show me some love, and I'm hoping to put a lot more investing videos out there for you guys. Hey, appreciate it, guys. Happy investing.